Hello guys, welcome to my channel, The Commerce Specialist. As promised in my previous video, this video today's is about IAS 16, Property, Plant and Equipment. IAS 16 has all the guidance relating to depreciation. So let me tell you the four main provisions of IAS 16. IAS 16 tells us about initial recognition. Initial recognition is when you are buying a non-current asset, what is the value you are going to record your non-current assets in your financial records. So the guidance is pretty clear. You have to record your non-current assets on the initial cost, the cost of purchase. And if you look at this, I've put a plus sign here. The cost of purchase plus capital expenditures, mandatory expenditures. So for example, if you have purchased, if you have imported a motor vehicle from XYZ country, so let's say you paid for the motor vehicle 1 million, the cost of the motor vehicle. You paid for transit insurance, you paid for transportation, carriage that is, you paid for custom duty, any other import duty, registration charges, any legal expenses. All this would be added to the cost of the asset. This is what is meant by initial recognition. All non-current assets to be recorded at their cost. The second important area of IAS 16 is regarding depreciation. What methods to use? Generally, IAS 16 recommends companies can use either straight line or declining balance method to depreciate the non-current assets. So if you have seen my previous video, I have given you detailed numerical example on what is depreciation, how to calculate depreciation by straight line, declining balance method, so on and so forth. Today, our focus would be on the revaluation. One of the important element of IAS 16, the important provision. What is revaluation? Understand this. When we buy assets, in my previous video I've already discussed this, when we buy a non-current asset, we use it for a particular few years. After using them, obviously they depreciate. So once they depreciate, the value after depreciation is known as the net book value. For example, have a look at this. Let's say you purchased an asset, a non-current asset for 100,000. I'm just giving you a simple example. Okay, and there was no salvage value and the life was, let's say, 5 years. So when you divide, you get 20,000 as annual depreciation. Let's say this asset you used for 4 years. So what would be the total depreciation? 80,000. So if I put the details here, the cost is 100,000. The accumulated depreciation, all these 4 years, is 80,000. What is the net book value? Just 20,000 left. Now, ladies and gentlemen, please pay attention here now. The net book value of the asset is 20,000. What about the market value, which we call actually fair value? And this net book value is also known as carrying value. IAS 16 says if there is a significant difference, a huge difference between the net book value and the market value, the asset should be revalued. So let's say the net book value is 20,000 and the fair value or the market value happens to be 200,000. You know, market has its own dynamics. There are so many factors which contribute to the market price. So in this particular situation, if you look at this 20,000, which is as per company's records, but the fair value, the market value is 200,000, there is a significant difference between the carrying value and the fair value. The asset should be revalued as per IAS 16. Now the question to ask is, how revaluation is done? Revaluation is done by experts, those who have experience and expertise in this particular type of non-current assets. Here we'll talk about real estate agents, real estate companies who have the expertise. They will do the revaluation. Next, we are going to talk about a numerical example of revaluation, which will cover calculation of revised annual depreciation, recording revaluation, the journal entry, and the excess depreciation as well. And after that, we'll talk about the fourth element, the fourth provision in IAS 16, which is derecognition. So these are the four main provisions of IAS 16. So let's look at a numerical example. So guys, if you look at this few details I've given you here, an asset has been purchased on January 1st, 2015, having a cost of 1 million, life of 20 years, salvage value I've just taken as 0, you can take any amount. What is happening? The asset which you purchased on January 1st, 2015 is revalued on January 1st, 2020 at 1.2 million. What are we going to do now? So please understand, in order to record revaluation, the journal entry, we need to do certain calculations. First of all, let's look at the annual depreciation of the asset before revaluation. The cost was, let's put the formula, cost minus salvage value divided by life, that is straight line method. So the cost was 1 million, salvage value was 0, life in years was 20. When you do this, you get annual depreciation as 50,000. This is your annual depreciation before revision. If you look at the date of purchase and the date of revision, so from 2015 right up till the end, a day before this is exactly 5 years, which means before revaluing, you have used the machine for 5 years. So if you have used the asset for 5 years, what would be the accumulated depreciation, the total depreciation? 250,000. So after using the asset for 5 years, total depreciation is 215,000. Now we are going to give the entry for revaluation. How to record revaluation? Please have a look at cost. This is very important. The original historical cost and the amount at which you are revaluing it. The historical cost was 1 million. You are revaluing it at 1200,000. So there is an increase of 200,000. If the asset is increasing, as per the rules of debit and credit, we need to debit. So let's say the asset is a building. So I'm debiting building with the difference between the original amount and the revalued amount, which is 200,000. As per IAS 16, whenever an asset is revalued, any depreciation charged so far, which is the accumulated depreciation, should be cancelled out, should be nullified. Accumulated depreciation generally have a credit balance. To close it, to cancel it, I am debiting accumulated depreciation, which is 250,000. And with the total of these two, I'll credit revaluation surplus. which is 450,000. So this is how revaluation is recorded. Just to sum it up very quickly, we look at the original amount, the cost of the asset and the revalued amount. It is increasing, that's why I've debited the building. All accumulated depreciation calculated is to be cancelled out, I debited it. With the total, I credited revaluation surplus. Now there is an important guidance in IAS 16. IAS 16 permits us, allows companies to transfer the excess depreciation to the retained earning accounts. So first we need to know what is excess depreciation. Guys, if you look at the annual depreciation before revaluation, it was 50,000. Now, if we do the revised annual depreciation, that is after revaluation, revised annual depreciation, what is your revalued amount? 1200,000. There is no salvage value. Look, the original life was 20 years. You used the asset for 5 years. So what is the remaining life now at the date of revaluation? It is 15 years. 20 years was the original life. You used it for 5 years. Now the remaining life, you divide it by remaining life. So your revised annual depreciation comes to 80,000. So please note, your original depreciation before revaluation was 50,000. After revaluation, your annual depreciation is coming to 80. The difference between these two is known as excess depreciation. And how do we record it? We simply debit revaluation surplus and credit retained earnings. By 30,000. So the difference between the old depreciation and the depreciation after revaluation is the excess depreciation. This is how it is recorded. Now you'll be thinking why. Please note that revaluation surplus is a restricted reserve. By restricted reserve, I mean it is an undistributable reserve. So IAS 16 allows us to transfer this into the retained earning. So when I debit this revaluation surplus, I am reducing the undistributable reserve. When I credit retained earning, I am transferring it to the distributable reserve. So this is how excess depreciation is recorded and what is excess depreciation. I hope you have understood this. Finally, the last point in IAS 16 is derecognition. Derecognition. Derecognition means what happens when you sell the asset? What happens when the asset is no more useful for the company? It does not generate future economic benefits. They are to be derecognized. Derecognized means removed from the accounting records. So obviously we'll do the calculation of gain or loss on disposal. All gains are added to profits and losses are subtracted. That is what is derecognition about. So I'm assuming, let's say an asset which has a cost of, let's say 400,000, having an accumulated depreciation of, let's say 300,000, would have a net book value of 100,000. What if this asset is sold, disposed of? So let's say it is sold for 20,000. So how much is the difference? 80,000. Now you can compare these two figures. If the value of the asset was 100,000, it has been disposed of, your sale proceeds are 20,000. Obviously you are making a loss on disposal. So how it is recorded? It's pretty simple. Look, when you're selling, obviously you're getting money. How much you're getting? You're getting 20,000. Cash should be debited by 20,000. Whether you are revaluing the asset or you are de-recognizing it, you're selling it. All accumulated depreciation, depreciation calculated so far is to be cancelled out, which means I will debit accumulated depreciation to cancel out, which is 300,000. If there is a loss, all losses are recorded as a debit. So I will debit loss as well, which is 80,000. And obviously this asset, let's say it's a motor vehicle. When we purchase the motor vehicle, increase in an asset, we would have debited it. When we are selling, we credit it with its cost. So you credit motor vehicle with 400,000. This is how you record disposal of an asset. One thing you need to remember is, look, cash would always be debited. I'm just putting an asterisk here. Cash will always be debited with the sale proceeds, which means the amount which you're getting. When you're selling it, how much you're getting. Cash would always be debited. Accumulated depreciation will always be debited to close the depreciation account, the accumulated depreciation account. The asset will always be credited with its cost. Now the only thing left is, if there is a loss, it would be debited. If there is a gain, that would be credited. I hope I'm able to explain gain or loss on disposal and how it is recorded. Now, the next thing is, what if the asset is revalued, but it's a downward revaluation? Here, if you look at the cost was 1 million, it was revalued at 1.2 million. What if it's a downward revaluation? What do we do? So let's look at a simple example. Assuming the assets has a carrying value of, let's say, 100,000. There is a revaluation surplus on this assets which was revalued earlier, so it has a revaluation surplus of, let's say, 20,000. And now it is revalued at, let's say, 60,000. So if you look at the difference between these two, it is downward revaluation. On revaluation, the value is not increasing as in the previous example. It's going down. But please, you need to remember, if there is an existing revaluation surplus, that is to be cancelled out first. So now when I record it, I will debit the revaluation surplus, which is how much? 20,000. If you look at the difference between these two, is actually 40. The difference is 40,000. By 20,000, I have cancelled the existing revaluation surplus. Another 20,000 would be charged to profit and loss. And you credit the asset, which let's say it's a motor vehicle, you credit it with 40,000. So this is how we record a downward revaluation. If there is a revaluation surplus balance on the same asset, first that is cancelled out. Any excessive downward revaluation is charged to profit and loss, and the asset is credited with the total. Now guys, in the end, some important guidelines of IAS 16. If we don't follow them, it will lead towards creative accounting. IAS 16 says very clearly that once an asset is revalued, all the assets in the same category, in the same class, are to be revalued. That means you cannot pick and choose. For example, if a company has 10 different buildings, If building A they are revaluing and there is a revaluation surplus on that, and on building B if they think if they revalue it will have a downward revaluation, they leave it. They can't do it. They cannot pick and choose. They cannot be selective. Once an asset is revalued, all the assets in the same category are to be revalued at regular intervals. So that's all about it, guys. I hope I'm able to explain the idea, the concept to you. Let me know in your comments whether you have understood this. If you have any doubts, any queries, please write it in your comments. Also do let me know what topics you need my upcoming videos on. So obviously I will keep that into consideration. If you are new to my channel, please subscribe to it. Press the bell icon, that's important, so that you don't miss my upcoming videos. And if you like the content, only then give me a like. Thank you so very much for giving me your precious time.